Welcome to the ACA conference in New York City. I'm Jane King. With me is Axel Merk of Merk Investments. So welcome, and give me an overview of Merk Investments. What do you do?
Great to see you again. We are a boutique shop. We manage about 1.6 billion in gold and gold mining, not the sort of thing that most closed-end fund investors do. On the closed-end fund side, in 2019, Merk Investments was awarded the advisory agreement for ASA Gold and Precious Metals Limited, NYSE ASA, which is a closed-end fund that was founded back in 1958.
Wow.
So that's been around a little bit, and in the 1950s, you couldn't invest in gold, so it was actually founded in South Africa, reincorporated in Bermuda in 2004. But ever since 1958, it's been an investment company in the US, so making gold mining investing accessible to US investors.
So, and gold has been hitting record highs.
Yes, with some ups and downs after the election, but yes, it's been a very favorable environment. The gold miners have participated in some of that. A lot of gold mining investors have been disappointed that the major companies have been able to translate that into more profits. Some of that is company specific. The junior mining companies, it's an area we have shifted the portfolio from an index tagging portfolio in 2019 towards really the exploration side of things. You would expect significant more dynamic. We've had that, but historically speaking, you would have expected even more. And it's one of the reasons why we think we're still in the kind of early to mid-innings in the cycle, where you have quite some substantial volatility in that space, which can of course happen both on the up and on the downside. But from an investor's point of view, that volatility provides a tremendous diversification potential, even with a fairly small allocation.
Interesting. And you mentioned the new administration coming in. Any thoughts on the Trump administration, regulations, mining?
Sure. How many hours do we have?
Oh my goodness, I know. There's a lot there.
So on a high level, with the caveat, right, that most crystal ball predictions are wrong for the next year. And part of that is, of course, because you have the enthusiasm and then the reality kicks in. So whatever view somebody has, one might want to qualify that a little bit. The immediate reaction was that longer term yields popped a little bit higher, and that's somewhat relevant, both based on maybe more inflation coming down the road and maybe real yields being higher if the growth potential is higher. Higher growth potential tends to be a headwind for the price of gold. Higher tariffs, at least in the short term, might be a headwind. If you take the previous Trump administration, in the early months, the first 2 or 3 months, the price of gold suffered. But then, as things progressed, the price of gold actually did quite well. Historically speaking, if you look the last 20 plus years, the environment when you don't want to be in gold is when interest rates are near zero and inflation is very high, the financial repression environment. And this might be counterintuitive, but it's possibly because of the outlook that something else, that higher rates might come down the road, that could be a headwind. In any case, where we are right now is somewhat of a goldilocks environment where rates have been coming down, inflation has been coming down. Historically, that's a very favorable environment to be in gold and gold mining.
Interesting. Well, we will keep an eye on that. Axel, thank you so much.
My pleasure.
Yep.